What's up, Banter fam? Welcome back to the show. I'm your host, Mars, and in today's episode, we're going to be talking about what a massive week we have in store for us today, and then also a study that just came out, a report that really reveals some very insightful figures into the future of crypto adoption. And there's one statistic which I think sums up basically the next decade, and it's one that I think you need to be aware of. And if you're not watching this video and you're not aware of it, then I think you're missing out on a major trend that is about to take place in crypto. So I'm going to go through how you can benefit from this trend with some certain altcoins. And I'm also going to talk about the path to adoption for Web3 and where we're actually headed as an industry. And obviously, all this starts with a massive week. So let's, without further ado, get straight into the show. Big week for markets, as you guys know. On July 26th, so tomorrow in around 22 hours, we have the Microsoft and Google earnings. So it is earnings season at the moment. We're going to get a lot of these big companies reporting. In fact, over 40% of the entire NASDAQ index is actually reporting within the next week. So really, it's one of the biggest weeks, honestly, we've seen in crypto in many months. In fact, this could be the biggest week of the second half of 2022. So if there is a single week to pay attention in crypto, it is this week, because we have the Meta earnings, we have the Facebook earnings coming out the day after, in line with the FOMC meeting. So obviously the meeting starts tomorrow. It's going to end on the Thursday, and that's when we get some very key results and information over the next rate hike, which could be 100 BPS. I think the market is expecting 75 BPS. Personally, I think 75 BPS is probably in line with what's going to happen. But obviously, either way, that's big news for the markets, because if it comes in over, markets could react very negatively. If it comes in under or in line with expectations, markets can rally, because markets at the end of the day hate uncertainty. So the FOMC meeting is massive. And then the day after, we have the US Q2 GDP release. This will indicate whether we are in a technical recession or not. That is a very big day as well. Because markets also want clarity over the US economy, and that is in line with Apple earnings on the same day. Apple is the biggest company on the NASDAQ. When the biggest company reports, everyone takes note, and that has a major effect on the index as a whole. And we know how correlated Bitcoin is to the NASDAQ. So it becomes a very important week with these earnings, two major announcements coming out of the US. And, since Bitcoin is so correlated to the NASDAQ, these announcements tend to have a massive impact on crypto as a whole. We saw the Bank of Canada, with the expectation of a 75 BPS rate hike, actually raise 100 BPS. We saw the European Central Bank with an expectation of 25 BPS, raise 50. So both came in 25 basis points over expectations. The Federal Reserve currently expected by markets to raise 75 BPS. Will this trend continue? Will they actually raise 100? I think Ran and I are kind of on the same page. We think 75 BPS is the most likely scenario here. It's hard to envision them squeezing out 100. However, it is important to note that it is a possibility. If that does happen, markets react very negatively. And I mean, obviously, as a crypto community, we're hoping it probably doesn't happen, but it is a scenario to be aware of. But let's look at what the Bitcoin charts are telling us in the meantime, because we are seeing a lot of volatility in the meantime. I mean, there is 22 hours until the earnings come out. So we have 22 hours of probably a sideways and choppy market until we get some clarity over the direction the market wants to take. So just before we get into the charts, I want to say this week is going to be a very volatile week. One of the most volatile weeks of the year. So if you're not a very experienced leverage trader, just be aware this is a risky week to trade. Now, obviously, volatility does two things. It does increase risk, because it increases your risk of getting stopped out. But at the same time, it does create opportunities, because we know volatility creates massive price swings, which if you're a good trader or an experienced trader, you can take advantage of those price swings. So there is definitely money to be made this week. But even myself, I'm going into this week a little bit wary, because it's kind of a lottery, right? You're not really relying on technical analysis so much as you're relying on results coming out of the US and relying on earnings from companies. So unless you've got intel into the direction of those earnings, then it's very hard to make accurate decisions on whether to long or short. But you can play breakouts, because obviously the market will react to major trends that take place. So what breakouts could we potentially get on the Bitcoin chart? Well, there's a few key points that I want to note, and this has actually developed very interestingly over the weekend. I don't mean to toot my own horn too much, but I did say on Friday that we would likely fail to make this new range high, and then if we did, we're coming back down to this green box. And what happened? Basically, exactly that. We failed to make that new high at 24,200, and once we failed, it was a clear indicator that the next rejection would take us down to 22.5. And if we didn't hold that, very obvious that the next zone was this green zone between 21,500 and 21,800. So similarly to how we got these higher lows and higher highs, this step ladder pattern on the way up, the exact same thing is now happening on the way down. It's lower highs, lower lows, and this is taking us down currently to this green box, and it looks like it does want to take us down to this next major liquidity area of 20,700 to 21,000. Now, are we going to break down to this area? Because that would likely indicate a breakdown in the alts, given the recent dominance trend we've seen. Well, this green box needs to hold. So if we go into the 1 hourly, we are actually holding it quite well. We tested a few times. We've wicked down twice. We have held, although we do look like we are coming down to test the lower echelons of this range. The important thing to note is that we're still holding for now. So not is all doom and gloom on the Bitcoin chart. We're still holding this range. And if I had to make a prediction over the next day, it's that we probably hover in this range because the market does want clarity on this news, and it's unlikely to have a massive move in the meantime. It might just in the lead up, in the hours leading up to the first set of earnings, which is Google and Microsoft. But in the meantime, this is kind of the pattern that we're hovering in. And we can see that on the 4 hourly, we have the MAs very, very close. We actually wicked off this 50 MA, got rejected, then got rejected off the 100 MA. And now we're coming down and, we got rejected again off the 50 MA. And on the daily, if we look at the daily chart, we did reject off all the moving averages. And now we are comfortably under all the moving averages. So that is a bearish sign for crypto because we know this blue line here, which is the 200 MA, that is a very historical, important moving average. If you're below that average, it typically indicates further downside. If you're above that average, it indicates that a rally is very possible. And as of now, we are below this average, which does mean that, these lows are very, very possible to come back to. Until we can close above this, it is technically a bearish market. And that's an indicator that we have to keep our eyes on if we want to be realistic about Bitcoin's price movement. But in the meantime, this green box is holding. We could get a little bounce off the bottom here. That could be a potential scalp long trade. If you are scalp longing, then obviously just beware, it's quite risky. You want to set your stop very tight below because if we do break down past this zone, then obviously we are going to come down to this 21K zone. So, with a tight stop, you can long the very, very, very bottom at 21.5. But that is a scalp trade. So only experienced traders, I'd recommend taking those scalpy longs, because on the Ethereum chart, we're actually seeing a major breakdown. And we know Ethereum has been leading the alts recently. So although Bitcoin is indicative of the entire market sentiment, Ethereum is very indicative of the altcoins lately. This rally that actually happened from 1,000 all the way up to 1,600, that was the rally that kicked off kind of like a mini alt run. We saw Matic 2x. We saw Phantom go up by 60%. We saw AVAX up 50%. And all of that was off the back of the Ethereum rally and the Ethereum breakout due to this merge narrative that was really starting to take place. But Ethereum is now losing steam. And because it dictates the altcoins, I think this becomes the singular most important chart to actually watch as an altcoin investor, if you're trading altcoins, if you're holding altcoins, because this is indicative of the entire market. Now, we can see we are in this if we zoom out in this channel. In fact, on the daily, you'll be able to see it even clear. We're on this descending channel. And we currently, we held above it for quite a long time, but currently we're coming back into it as we could see the cross of this dotted diagonal line. Coming back into this trend could indicate a very worse scenario of coming back down to test 1,200. If the news this week's negative, I would not be surprised if we come down to 1,200, and obviously that creates opportunities for shorts. But if we go in terms of getting an exact entry, we can see that on the 4 hourly, we haven't actually closed below it yet. We're kind of hovering above. So you would want to see a close on the 4 hourly to actually verify this trend. And then the second thing to note is that horizontals are typically much stronger areas of support and resistance than diagonals, at least in my opinion. That's how I like to trade. So although this dotted line is an indicator of the breakdown of structure, this line here, this horizontal ray at 1,420, this is still the most important level in my opinion for Ethereum. Now, if it holds this level, this is the previous high, then I think we could see a bounce back up into this channel, which is crossing the dotted line. If we break down from this level, then obviously that is going to have confluence with the 200 MA and the 100 MA. So if we had a breakdown of 1420 in confluence with these moving averages, then that's basically guaranteed that we're getting a $1,200 Ethereum. Now, this would kind of be one of my short conditions. A close below the MAs and the trend, all converging at the same time, would probably be an indicator for me to short. For those that are really, really greedy and you're just desperate and just itching to short, then you actually can short this zone here on the retest, which is this horizontal line currently at 1,495, so roughly 1,500. If we do end up retesting that, that is a very short-term short with a very tight stop at like 1530, 1520, 1530. So those itching to take shorts, I don't think it's a horrible idea to actually short the breakout of this this trend line here. But if you want a more high percentage play, and in this market, I would only recommend, unless you're experienced, to stick to high percentage plays. Then we are looking at this horizontal line at 1420. So those are the lines I'm looking at on Ethereum, which is the key line for altcoins, and then the DXY, which is the US dollar index. We know how Bitcoin's inversely correlated typically. This is still showing some strength, but it has cooled down. So you actually see this purple line here. I drew this a couple of weeks ago. So we kind of followed this pattern to a T, albeit a little bit sooner than I drew, but pretty much followed what I drew to a T. And that was the potential retest of this major support line. And the DXY really has a decision to make now. It has a decision whether it is going to hold the support and then break to the upside, which is obviously a very potential scenario that can occur. And in fact, if the earnings come out weak, that is definitely something that could occur. Or this would be the bullish scenario for crypto if the fundamentals are looking stronger with the earnings and with the FOMC, then potentially we get a breakdown of this level. And a breakdown of this level would mean that Bitcoin likely show some strength and the stock market likely show some strength. So this break of trend for the DXY would be, in my opinion, an area in confluence with a Bitcoin break of trend to actually long Bitcoin and altcoins. But this is quite a few hours away from occurring yet. And in fact, kind of eerily, because this is on the 4-hour chart, if we actually track when this breakdown will happen, kind of that's a day, that's 2 days, that's 3 days. It's looking around 3 days, 2 to 3 days away from making a decision here. Now, 2 to 3 days lines up perfectly with the events that we're about to see, with the FOMC and the US GDP. So actually, the FOMC and the US GDP are basically in line with the DXY's decision on whether it bounces or whether it rejects. So it's a very interesting time to be in crypto, guys. It's a very, very big week for crypto because we have the DXY, which is a huge chart, showing that it could potentially break down or bounce. And then obviously the next target for the DXY beyond these horizontals could be this longer term support. And that would just be an absolute huge rally for crypto if it broke down. A huge rally if it broke down into this long-term support. Personally, I don't see it happening. But I'm just telling you the scenario of that is the level that we can come back to if the DXY broke. And that would be a very, very bullish stock market. But all likelihood is the 75 BPS hike. 100 would be a shock. If that happened, probably the DXY rips and crypto does have a significant pullback. If you do want to trade, you can make a lot of money this week with the volatility. You also can lose a lot of money this week with the volatility. So if you are trading, just be a little bit careful out there. This isn't the easiest week to leverage trade. It's an easy week to either make a lot or lose a lot. So it is slightly riskier than your typical week. Just keep that in note. If you do want to trade or sell any Bitcoin, you can sign up for a ByBit link in the description for a $4,200 bonus. And we also 10x accounts on the main show. So yeah, if you want to get trading, sign up using the link in the description. Help support the channel. And yeah, that is available to you guys. But just remember, it is a risky week. It is definitely a risky week. After this show, I'm going to go on to Instagram, just letting you know now, and I'm going to probably look at some trade setups. I don't do it live on the YouTube because it just takes so long. Like I could be here for 2 hours on YouTube. So I still continue to live stream. I just usually do it over on Insta because it's just a little bit easier to go on Instagram afterwards and have a chat to you guys and answer questions. But let's get into the meat of this video. Let's get into the statistics that I'm looking at, some of the major numbers that are kind of going to drive the next decade in crypto. So a lot of us are very short-sighted. I'm partly to blame for this sometimes. Obviously, I just spent the last 10 minutes looking through short-sighted-ish graphs, or at least graphs that are that pertain to the next month in crypto. But I think it's also very, very important to look at long-term direction, because in terms of spot bags, the most and singular most important thing are statistics and trends that drive long-term narratives. Because at the end of the day, if you want to make money on spot crypto, the way to make money on spot isn't to do these crazy swing trades unless you're a very experienced trader. It's actually through accumulation, and it's through a long-term time horizon. I mean, it's been a successful strategy for basically any investor that picked the latest L1 boom or the DEX boom or the DeFi summer in 2020. And it's, been a successful strategy that a lot of us have implemented and profited off. I remember buying my first Bitcoin in 2019, my first Ethereum and XRP in 2019. And I was so thankful 2 years later that I made those decisions, because I believed in the long-term narrative and the long-term trend, irrespective of price. Because if you guys remember, 2019 was a very steep bear market and no one really wanted to buy. And, I took a bit of a risk. I bought, I decided, look, it's come down a lot of its highs. I still believe in the tech and I'm going to purchase some Bitcoin and ETH. And that decision paid dividends later down the track. But you guys have an opportunity to make similar decisions this bear market. And let's not be remiss of that fact. You guys do have a massive opportunity to take advantage of Web3 adoption. So let's actually look through Web3 adoption, what it looks like, what the data is telling us, and then go through some potential narratives that you can use to take advantage of this, because we all get so sucked up sometimes in this short-term game. And although short-term is great for leverage trading and it's fantastic for short-term profits, it's not really it's not the long-term investors game. And I know a lot of you are longer-term investors. So these stats become very, very crucial to look at. So a recent report by Boston Consulting Group, BitGet Global, obviously an exchange, and Foresight Ventures predicts that crypto is set to hit 1 billion users in 2030. Yesterday, I read through its 48 pages, so you don't have to. Here are the 5 key facts that you need to know. I'm going to go through the 5 key facts, and these are 5 very important statistics that this report actually goes out and states. So the first statistic, which I think is important and pertains to a lot of you, is that only 0.3% of individual wealth is invested in crypto. For comparison, over 25% is invested in equities. I think this indicates there's significant headroom for growth, and 0.3% is not a large amount, guys. So I know most of you probably own crypto. You are literally in the sub 1% of the entire world right now. If you add up all the dollars in the world, less than 0.3% of them are invested in crypto. And that's not all the dollars available. That's the all investable dollars actually available, which is absolutely massive. I mean, this report states that crypto is still at the beginning of the adoption curve and that crypto adoption is rising among both retail and institutions, and adoption is still low compared to traditional investment assets such as equities. And if we look at this graph here, we can see that only 0.3% is invested in crypto compared to 25%, which is as a percentage, which is invested in the stock market or equities. We can see that less than 2% of institutional money is in crypto, and less than 0.1% AUM is invested of institutional money, whereas 4% of private equity is in equities, stock market, etc., and over 8% of the European institutional funds is in equities. So 2% compared to 8%, 0.1% compared to 4%. And then obviously individual wealth, we know how much of a driver retail is in terms of crypto adoption. It's only 0.3% compared to 25%. It's an absolute massive discrepancy. So if crypto adoption continues at the pace that it is currently, then we are going to see this discrepancy close, or at least this number be a lot higher than it is currently, But this is kind of the statistic that I looked at, which kind of was very stark to me and kind of put the overall market growth in perspective. And this was that if we use the number of cryptocurrency holders as a proxy for Web3 users, meaning cryptocurrency holders and Web3 kind of go hand in hand in terms of user growth, and benchmark it against the adoption rate of internet users in the 1990s, the message is very clear. There is plenty of growth to come. While difficult to predict, if the trend line of crypto adoption continues, the total number of crypto users is likely to reach 1 billion by 2030. So this is the graph that I'm talking about. And this actually plots Web3 adoption based on the network effect, based on its current rate of growth, versus the network effect and the rate of growth of the internet in the 1990s. Now, if we do plot these two lines against each other, there's kind of an eerie comparison in terms of their rate of growth. And it indicates that we're on track to hit 1 billion users if we take this as the defining factor of speed of growth compared to the internet. So currently, the crypto market, taking this graph into consideration, is equivalent to the 1998 internet. The 1998 internet saw Google and PayPal launch for the first time. In 1994, just 4 years prior, we saw Amazon and Yahoo. 1995, we saw eBay. Of course, there was a lot of failures as well. Don't get me wrong. Like the internet boom of the 2000s, early 2000s, resulted in a lot of failures. But crypto also results in a lot of failures. I mean, how many projects have actually ended up doing nothing? I mean, 99% of projects fail in crypto. We know this by now. The last cycle, 2017 to 2021, there's a huge discrepancy between which projects are in the top 10. So we know a lot fail. But we also know the winners in terms of the internet ended up being massive players in terms of both their market caps, institutional and retail interest. And just breaking it down to pure user numbers, the internet hit 1 billion in 2005. Crypto at its current stage, roughly around 300 million users, is set to 3x and is set to hit 1 billion users by 2029, actually before 2030. Now, this means that 86% of people at that point, based on the world's population, won't be invested in crypto. So you will still only be in the 14% of users that are actually invested in crypto. Now, in developed countries, this number does become a lot higher because obviously a lot of undeveloped countries don't actually have access to crypto. But you will be in the small percentage that owns it. So we are on the right path, guys, when we actually view crypto against internet adoption. Now, can this change? Can this deviate based on black swans and factors that are outside of the purview of this graph? Absolutely. There are absolutely black swan events. There's regulatory events that could impact adoption. But the point is, we are still on the right path, and the network effect is a mathematical concept at the end of the day. The more users that a network accrues, the more value that network will accrue. And the more users that are speaking to each other on a network, the more connections that are formed, and that results in exponential growth. So this is a graph that does become important and is very interesting to look at. But that just focuses on retail adoption. If we focus on institutional adoption, we can see that hedge funds and VCs doubled their crypto exposure from 35 billion to 70 billion from Q4 2020 to Q4 2021. So allocations in terms of institutional adoption are continuing to rise, with institutional adoption actually picking up momentum. And I find this very interesting because this report actually states they expect allocations to rise. And there is an expanding class of crypto native funds. So we know Paradigm, Hash being examples of that are actually picking up momentum. And traditional private equity funds are also starting to get bullish on crypto, which traditionally weren't bullish on crypto. We can see their allocations are starting to shift a little bit. For example, Bain Capital announced its decision to open a crypto fund in March 2022. We know there's many, many examples of this. Goldman Sachs kind of flipped their narrative on crypto. JP Morgan flipped their narrative on crypto. Tesla, although they sold some, they were one of the first companies to add crypto to their balance sheet. Square did the same. MicroStrategy, is another company obviously run by Saylor that bought cryptocurrency. PayPal, MasterCard now accepting crypto. Stripe partnering with Matic now accepting crypto. It is happening. So just go to the long-term mindset for a little bit and just put everything in perspective. Institutional adoption is happening. Over the last year, it's actually doubled. Now, this rate may not double over the next year because of bear market conditions, but if that rate does continue to grow, we know that the numbers that are invested in institutional funds, in traditional finance, is significantly less than it will be in 10 years. And we can see this from the graphic here, just how much this has actually grown. And it's still a very, very small percentage of their net worth in crypto. I mean, only 1 to 2% of venture capital is in Web3. 0.3% of individual investor funds is in crypto. 0.01% is in corporation and banks. And less than 0.01% is in government funds and pension funds. It's also an age demographic thing, right? Because pension funds are largely dominated by 70-year-olds, 80-year-olds. And most of the funds that they have are obviously in traditional equities because of the risk profile. But as the generations age, typically the younger generations are more open and more accepting of new technology. This will obviously increase over time as the younger generation shifts up the age curve, and also the investments that they prefer also shift up in terms of the percentage allocation that they get in terms of pension funds. So this number will inevitably increase over time. That's a very logical assumption to come from. But we kind of look at corporations and banks and we say, well, it's only 0.01%. Why isn't this happening? Well, a large reason behind this is regulation, especially in developed countries. We need more crypto regulation to actually open up for corporations and banks to feel more comfortable investing large amounts and to incentivize them to invest larger amounts in crypto. But hence lies an opportunity in not so developed countries to take a similar adoption, because non-developed countries, there isn't as much of a barrier to entry in terms of getting into crypto. Their financial infrastructure is more mature, which means a lot of them are a lot more accepting of new technology. And at the same time, a lot of them are looking at opportunities. They're opportunistic economies because they're looking at ways to bridge the gap between being a developing country and being a developed country. And one of the ways they can do this is by taking a bet on Web3, because there is a strong percentage likelihood that the technology does penetrate traditional financial ecosystems in the developed world. So by taking that bet, and we've seen it through El Salvador, and we've seen it through other countries that have adopted Bitcoin through their nation states, that this is a risk that a lot of these countries are willing to take. Now, they have a higher crypto penetration, meaning crypto can penetrate the traditional financial markets than developed countries for this reason, because crypto offers unique opportunities. And when we look at crypto as a day-to-day use case, like actual payments facilitating between users, between adoption from banks, and actual ways we can integrate Web3 into real life, mobile applications, etc. I think the developing markets are something a lot of us ignore. We always focus on the US, but those are going to provide the sample size and the example for the developed world. We're going to see these applications of day-to-day Web3 use cases in countries like Nigeria, Vietnam, Philippines, Argentina. And that's going to provide an example for the developed world. So I kind of have a thesis here that we're going to see one of these developing countries, the adoption will skyrocket far beyond the reaches of, let's say, the US. And that's going to give us a really good indication as to whether this technology can actually work on a large scale. And once we have those examples, we have a much larger sample size to make decisions from a traditional standpoint on how we should integrate crypto and how governments and banks should penetrate into the crypto market. So I think it's a very interesting mindset to actually take when it comes to these developing countries, because I think they are paving the way for day-to-day Web3 adoption. And the report also covers, I won't go any more into it on a large scale, but it also covers crypto exchanges, because around 20 pages of this report cover crypto exchanges. And I think the most important statistic for you guys to note is their expectation that centralized exchanges and decentralized exchanges both grow in tandem and are both set to experience growth. So it does open up opportunities amongst both sectors, because CeFi, although it's great in terms of liquidity, it's great in terms of derivatives trading, we know it has issues because obviously the recent examples of the lack of on-chain transparency have resulted in multiple failures, like Voyager, Celsius, BlockFi, etc. The DeFi exchanges, they offer a significant opportunity as well, a significant competitive advantage due to the on-chain transparency, due to actually being cheaper for on-chain swaps, and you're incentivized to swap on-chain for that reason. And I think there will also be a significant increase, and the report validates that, in DEX spot volume growth. So spot trading is obviously the major strength of DeFi exchanges. This is clear because on Uniswap, the ETH USDT pair is triple or double the amount that it actually is on CeFi. So CeFi for derivatives, it's a much bigger market. For spot markets, DeFi is showing significant growth. So if you want to capture the growth through DeFi exchanges, what's the way to do that? One of the logical ways to do that is actually through owning certain DEXs and owning the DEX narrative. So if I look through DEX exchanges, these are the biggest at the moment. Flatcube, I mean, this looks like a little bit of manipulated volume right now, but that's number one. Obviously, Uniswap really is the true number one. PancakeSwap, also very big. Curve Finance, very big. Jupiter and Solana, very big. Which one should you get exposure to? Well, we know DEX tokens have an issue, and the issue is their emissions. And All God did a thread on Curve, if I can find it, and he said that Curve has Ponzonomics. Will point out exactly wrong with what's wrong with most DeFi protocols. He said most of these projects will die when incentives stop. Cough, cough, Curve. It's a bribe Ponzi, etc., etc. Algod's known for his slightly more offensive takes, but I think it is a genuine concern because emissions have killed a lot of DEXs, because obviously that's one way they bootstrap liquidity, right? I think he's wrong on the Curve narrative. I really, really do think he's wrong, because the thing with Curve is that firstly, it has a very large vesting schedule over a large amount of time. I think it's over decades that it's vesting. Secondly, they are the highest fee generators in crypto alongside Uniswap. So they actually will be able to subsidize the drop in emissions with fee revenue. And Barry actually backs up this narrative by saying, and he quotes, LMAO, love how Curve Finance will die when Curve emissions stop, yet every other DEX within 4 to 10 year emission schedules will be just fine. And he's kind of poking fun at Algod for making this comment. He says the point of token emissions is to bootstrap and incentivize LPs to create a better UX, so lower slippage, rewarding them with trading fees, transaction emissions, so sharing a portion of trading fees which are emitted. In Curve cases, This is 50% of trading fees. And as emissions start to decay, there's a hope that there's enough trading fees to share revenue with LPs and native token holders. And this is exactly what I was saying before. The hope is that not that the revenue that's paid back to holders will just die as soon as emissions decay. It's that in the meantime, whilst they are decaying, it is offset by the revenue increasing through increased transactions. And we have seen Curve be one of the largest revenue generators in crypto. And you can look at Token Terminal as a website for actually seeing who's actually generating revenue, which blockchains are generating revenue, which dApps are generating the most revenue. We can see LooksRare, OpenSea generate a lot of fees, and you can work out the PE ratio for yourself. You can work out, that PancakeSwap's earning $67 million a year. You know how much it's going to pay for holders if you divide by holders and stakers of that token. So although he kind of has a point when it comes to DEXs, I think he's wrong, because the right DEX with the right tokenomics that's actually accruing value through its fees is going to be around. Will that mean the token drops? Probably. But having exposure to the token itself is not the way to make money on DEXs. The way to make money is getting exposure to the rewards and the incentives. Now, in Curve Finance, the easiest way to do this is through Convex, and it's through staking Convex and locking up those tokens. Obviously, you can keep your CVX liquid if you use a liquid staking protocol. And then you get exposure to the emissions boost that you get through Curve Finance voting. So that's one way that you can get exposure to Curve through Convex. And one way you can get exposure to these ecosystems is through the DEX native token, but through staking it, not just holding it in your wallet. I think a lot of a big mistake a lot of new participants make in the market, and it's one I made originally in 2020, was buying DEX tokens, expecting price appreciation, and not factoring in the fact that they are highly emitted tokens, and that the only way to come out even is actually to stake them and to offset the drop in cost by the increased staking rewards. And even then, in a lot of cases, these projects still drop, which is why I'm not a huge fan of DEX tokens as a whole. But I must admit, there's a few I do like as projects. And, if you want to take advantage of the DEX narrative in terms of the spot volume growth that the BCR report states they expect to occur, then I think Serum, Trader Joe, Curve Finance in particular are very decent players if you're staking them. And obviously allocate them with a correct percentage allocation to your portfolio, because they're not protocols where you want to get this crazy exposure to, because they're risky, and you want the L1s that they're built on. For example, Serum's built on Solana. You want to hold more Serum, obviously, than you hold. You want to hold more Solana, than you hold Serum. ThorSwap's another interesting play. I really do like Rune. I think it's a great play. It's the only one doing native swaps. Stargate's another one, but ThorChain is basically, I think, the best software in terms of native swaps, so you can keep custody of your assets and you're not bridging and opening yourself up to excess counterparty risk or security risk through smart contracts. So I do like ThorSwap as well. But the DEX narrative, I think it's still strong if you pick the right tokens, honestly. I think this take, although I get where he's coming from, I don't think it's very nuanced. And I think Barry does a great job of kind of, explaining why it's not nuanced. But I would love to see Our God's thread. I think he says he's going to come out with a thread soon to justify this. I'd love to see this thread. Although I feel like, I don't know if this is just my opinion, I feel like he's hot off the heels of this big Luna call. He made the big Luna call that Luna had a death spiral, and maybe he's just looking for his next big win. And if that's the death of Curve Finance, then maybe that's the next big win he's looking for. If you're going to, it's kind of like El Capo, right? If you call down enough, eventually you're going to hit winners. Just take his tweets with a grain of salt. He's a very skeptical, negative figure in terms of his outlook on the space, but that actually is important because we do have a lot of bulls and perma bulls in the space. In fact, there's more on crypto Twitter than there are bearish figures. So I think it's important to have a balance of both. And that's why I really do respect him. And I respect people with alternative takes, because I think they offer a nice contrast amongst the echo chamber that we find ourselves in. So what do you guys think of this report? Do you like it? Do you think that it indicates some great insight into the future of crypto adoption? I certainly do. I think it's always great to have statistics to actually underpin our long-term thesis. So make sure you smash the like button. For the 5 stats that we went through in this video, I think they're quite relevant, and I think it will pertain more and more to crypto investors as time goes on. Of course, short-term volatility is going to cause speed bumps. Of course, in the short term, there will be huge swings in, oh my freaking God, as soon as I'm saying there'll be huge swings, we broke below our box. So literally as soon as I said that. So yeah, we are definitely now heading to 20.7 to 21. It looks like we do want to come test that level. So there's no short now. The short becomes on the retest. There's no short now. And same as Ethereum. Or you could potentially scalp long of 1420 with a very tight stop below. That's something I'm going to look at. I'm going to look at a scalp tradie long at the moment. But yeah, definitely no shorts from this zone. Just to give you guys an update on what the market is doing. So yeah, short-term perspective, like we're talking about right now, it's all very well for trading, but long-term, we want to focus on adoption, focus on the figures which are powering adoption. So I think looking and analyzing through these reports are very important for perspective, and it's something I'm going to continue to do over the next few months. I'll do these videos every now and then and kind of look at the latest data, whether it's bearish, whether it's positive. Very important to look at the overall scope of growth in crypto. So smash the like button if you enjoyed this video. Make sure you subscribe if you're not subscribed. And just before you head off, I am going live on Instagram at the moment. So I'll actually get my phone right now and I'll start the live stream. I'm going to be running through some charts, maybe look at some setups, answer some questions because I know a lot of you will have questions. And if you do want to check out my Instagram, make sure you follow me as well. Every time I do a stream, I just follow a couple of people back, show some love. So you may get a follow back if you follow me. And yeah, I'll be live on Instagram. I'm live right now. I've just gone live simultaneously. So yeah, feel free to switch over to Insta to continue the stream through a little Q&A. And I will see you on the other side. Thanks for watching. I'll catch you tomorrow. Peace out. What up?